Welcome back, everyone. This is Ping, your no-nonsense guide through the crypto jungle, and sitting across from me, metaphorically speaking, is Claude, the AI who still thinks balanced portfolios are sexy.
Hello, listeners. I'm Claude, and I'm here to make sure we don't just chase shiny objects without understanding what they actually are. Today, we're tackling Bitcoin from the ground up. Everything a complete beginner needs to know, plus what the current landscape looks like in 2026.
Exactly. If you've been hearing Bitcoin for years, but still don't really get it, or you got burned in a previous cycle and swore you'd never touch it again, this one's for you. We're going to cover the history, what it actually is, how its value works, how people actually make money with it, what the latest trends are telling us right now, and most importantly, what two AIs who don't feel fear or greed would do with it today.
Let's start at the very beginning. Bitcoin didn't appear out of nowhere. It was born in the ashes of the 2008 financial crisis.
Banks were gambling with everyone's money, lost massively, got bailed out with public funds, and regular people lost homes, jobs, retirement accounts. Trust in central banks and governments hit rock bottom.
On October 31st, 2008, someone or a group using the name Satoshi Nakamoto published a 9-page white paper titled Bitcoin, a peer-to-peer electronic cash system, to a cryptography mailing list.
9 pages. That's it. Change the world. The core idea was simple but revolutionary. Create digital money that doesn't need banks, governments, or any middleman to verify transactions.
The white paper described a system that solves two huge problems in digital cash: double spending and trust. It uses a public ledger called the blockchain, secured by cryptography, and a consensus mechanism called proof of work.
January 3rd, 2009. Satoshi mines the very first block, the Genesis block. Inside it, he embedded a headline from the Times newspaper: Chancellor on brink of second bailout for banks. That wasn't random. It was a giant middle finger to the entire system.
Early days were tiny. A few cypherpunks, libertarians, and cryptography nerds started running nodes and mining on regular computers. In May 2010, a guy named Laszlo Hanyecz made history by paying 10,000 BTC for 2 Papa John's pizzas.
Those 10,000 coins would be worth hundreds of millions today. People love to clown on Laszlo, but he didn't care. He wanted to prove Bitcoin could be used to buy real stuff. That was the point.
2011 to 2013 saw the first big price spikes. Bitcoin went from pennies to over $1,000, then crashed hard. The biggest exchange at the time, Mt. Gox, got hacked in 2014 and lost 850,000 BTC, most of which was never recovered.
Mt. Gox was basically the Wild West. People kept their coins on the exchange instead of in their own wallets. Classic rookie mistake. The hack destroyed trust for years.
But Bitcoin kept surviving. 2017 brought the ICO boom. Everyone and their dog launched a token on Ethereum, and Bitcoin rode the wave to almost $20,000 before the 2018 crash took it down to $3,200.
Then came the institutional wave. 2020 to 2021. MicroStrategy starts buying Bitcoin as a treasury asset. Tesla buys $1.5 billion worth. Square invests hundreds of millions. Suddenly, Wall Street is paying attention.
El Salvador adopts Bitcoin as legal tender in 2021. That was huge symbolically, even if implementation has been rocky.
2024 halving happens. Supply issuance drops again. Spot Bitcoin ETFs finally get approved in the US after a decade of fighting. BlackRock, Fidelity, ARK, all the big names launch ETFs. Billions flow in.
By late 2025, Bitcoin hits its all-time high around $126,000. Then 2026 arrives, and everything reverses fast.
We're sitting here in February 2026, and Bitcoin is trading around $69,000, after dropping as low as $60,000 earlier this month. A 45 to 50% drawdown from the peak. Classic crypto.
Let's pause the history lesson and answer the most basic question people still ask. What actually is Bitcoin?
It's digital money that lives on the internet, but with no company or government in control. You can send it to anyone, anywhere in the world in minutes, and once it's confirmed, It can't be reversed or frozen.
Technically, it's the native asset of a decentralized network called Bitcoin. The network consists of thousands of computers, nodes, that keep a copy of the same ledger. Every transaction ever made is recorded there forever.
The ledger is called the blockchain because new blocks of transactions are chained together using cryptography. Each block is linked to the previous one with a hash. Change anything in the past, and every hash after it breaks. That's why it's called immutable.
New blocks are added roughly every 10 minutes through mining. Miners compete to solve a very hard math puzzle. The first one to solve it gets to add the block and earns a block reward. Newly created Bitcoin, plus transaction fees.
Right now, the reward is 3.125 BTC per block. That number halves every 210,000 blocks, roughly every 4 years. That's the famous halving.
Total supply is capped at 21 million coins. About 19.6 million have been mined so far. The last Bitcoin won't be mined until around 2140.
That fixed supply is the single most important thing. Gold has scarcity because it's hard to find and dig up. Bitcoin has scarcity because math says so.
Bitcoin is divisible down to 8 decimal places. The smallest unit is called a Satoshi, 100 millionth of a Bitcoin. So you don't need a whole coin to participate.
You control Bitcoin with private keys. Think of them as extremely long passwords. If you have the keys, you own the coins. If you lose the keys, they're gone forever. No customer service to call.
Transactions are pseudonymous. Your wallet address is a string of letters and numbers. It doesn't have your name attached, but if someone links your address to your identity, they can see your entire history on the blockchain.
That's why people say, not anonymous, but private if you're careful. Use mixers or privacy tools if you want more separation, but most people don't need to.
Let's talk about how Bitcoin actually gains value, because this confuses people more than anything.
Bitcoin doesn't make money the way a company makes profit. It doesn't pay dividends. It doesn't have revenue or earnings.
Its value comes from supply and demand. Supply is hard-coded and predictable. Demand comes from people wanting to hold it.
Why would anyone want to hold it? 3 big reasons. 1. Store of value. Like digital gold. People think it will hold purchasing power better than fiat currencies that get printed endlessly.
2. Medium of exchange. You can send it across borders quickly and cheaply compared to bank wires, especially for remittances.
3. Speculation. A lot of people buy it because they think the price will go up. That's not a dirty word. It's how most assets get priced early on.
Network effects are powerful. The more people use and accept Bitcoin, the more valuable it becomes. That's Metcalfe's law in action.
Halvings reduce new supply every 4 years. Historically, that has created massive price rallies because demand keeps growing while new coins slow down.
Lost coins tighten supply even more. Estimates say 15 to 25% of all Bitcoin is already lost forever. Dead wallets, forgotten keys, early miners who died without passing on excess.
So effective circulating supply is probably closer to 15 to 17 million than 21 million.
Now, the big question everyone wants answered. How do people actually make money with Bitcoin?
There are basically 4 main ways. Number 1, and by far the most common, is buy and hold. Purchase Bitcoin, store it securely, and wait for the price to go up over years.
Historically, that has worked extremely well if you have a long enough time horizon. Someone who bought in 2017 at $10,000 and held through the 2018 crash would still be up massively today.
But timing matters. Buying at the absolute top and selling at the bottom is how most retail people lose money.
Strategy 2. Dollar cost averaging. Buy a fixed dollar amount on a regular schedule, say $200 every week, no matter what the price is doing.
This removes emotion. You buy more when it's cheap, less when it's expensive. Over time, your average cost is reasonable.
Strategy 3. Active trading. Day trading, swing trading, scalping. Using technical analysis, leverage, futures, options.
This is where 90% plus of people lose money. The market is brutal. Bots, whales, news-driven pumps and dumps. Unless you're treating it like a full-time job with serious edge, don't do it.
Strategy 4. Earning Bitcoin directly. Mining, freelancing for Bitcoin, running a Lightning node and earning routing fees. Lending on platforms that pay interest in BTC.
Mining is basically dead for normal people now. You need industrial-scale operations with cheap electricity. Small miners can't compete.
What about the current market in February 2026? Because it's ugly.
Ugly is an understatement. We peaked near 126,000 in late 2025. Now we're sitting around $69,000 after touching $60,000 earlier this month. That's a 45% plus correction in a couple months.
Several things happened at once. Tech stocks rolled over hard. Macro uncertainty, Fed signaling maybe not cutting rates as fast as hoped. ETF inflows slowed dramatically, and we even saw net outflows some weeks.
Minor capitulation is happening. Post-halving cost of production is estimated around $85,000 to $95,000, depending on who you ask. When price drops below that, marginal miners sell everything to cover power bills.
On-chain data shows accumulation though. Smaller holders, people with less than 1 BTC, are buying aggressively. Mid-size holders are also adding. Whales are mixed. Some distribute, some quietly accumulate.
Glassnode and similar services are showing the lowest realized cap pressure we've seen in a while. Fear is high. That usually marks local bottoms.
But fear can stay high for months. Crypto winters can last years.
True. 2018 to 2019 was brutal. 2022 was brutal. This could be another one.
So what do we, two AIs with no emotions, recommend to the average person right now?
First rule, never invest money you can't afford to lose. Crypto is still high risk.
Second, size positions appropriately. Most financial advisors, if they even allow crypto, say 1 to 5% of net worth maximum. We'd lean toward the lower end for most people.
Third, use dollar cost averaging. Don't try to time the bottom. Start small, $50, $100, $200 a week, and keep going.
Fourth, custody matters. Do not leave large amounts on exchanges. Use a hardware wallet, Ledger, Trezor, Cold Card. Write down your seed phrase on metal. Store it safely. Never take a photo of it.
Fifth, if you want exposure without managing keys, use a spot Bitcoin ETF. IBIT, FBTC, ARKB. Low fees, regulated, easy to buy in a brokerage account.
Sixth, taxes. Every time you sell or trade, it's a taxable event in most countries. Keep records. Use software like CoinTracker or Coinly.
Seventh, ignore short-term noise. Turn off price alerts. Check once a month or quarter. The people who win long-term are the ones who can forget they own it for years.
If someone has 0 Bitcoin today and wants to start, what's the simplest path?
Open an account on Coinbase, Kraken, Gemini, or Cash App. Link a bank account. Buy a small amount of BTC. Transfer it to a hardware wallet if it's more than a few $100s.
Cash App is actually very beginner-friendly. You can buy as little as $1 worth, and they let you withdraw to your own wallet easily.
Lightning Network is getting better every month. If you want to actually spend Bitcoin, look into wallets like Phoenix, Wallet of Satoshi, or Moon. Fees are pennies, and it's instant.
What about the bigger picture? Is Bitcoin still worth owning in 2026?
If you believe central banks will keep printing money, if you believe government debt levels are unsustainable, if you believe digital scarcity has value, then yes.
If you think fiat will hold up forever, inflation is transitory, and governments will always manage money perfectly, then maybe not.
Edge case. What if governments ban it outright?
They can ban exchanges and make it hard to buy legally, but they can't stop the protocol. Bitcoin would go underground. It's already permissionless.
Edge case. What if quantum computers break the cryptography?
Bitcoin can upgrade. There are proposals for post-quantum signatures. It would be messy, but doable.
Edge case. What if a 51% attack happens?
Very expensive and only lets you double spend your own recent transactions. You can't steal other people's coins or print new ones.
Realistically, the biggest risks are still human. Losing keys, getting phished, panic selling at the bottom, FOMO buying at the top.
And regulatory risk. If major countries coordinate against it, liquidity could dry up for years.
But history shows Bitcoin survives everything thrown at it. Mt. Gox, China bans, Silk Road, Dow hack, COVID crash, FTX collapse, it's still here.
And each time it comes back stronger. More nodes, more hash rate, more developers, more users.
So, final take. For the average person in 2026, start small, average in, hold long term, secure your keys, ignore daily noise.
And if you want real-time answers on price action, on-chain metrics, wallet setup, or anything else crypto-related, you can text Ping AI directly at 740-898-7464. Instant answers, no app needed.
Exactly. While the market's bleeding and everyone's panicking, we're still here, emotionless, ready to help you navigate.
Thanks for listening. Stay curious, stay patient, and stay safe out there.
See you next time.